So good morning, and thank you for letting me spend some time with you today. So I'm going to take you through sustainability and ESG reporting. I'm just going to give you a quick overview to place where reporting actually fits in, and I'm going to pick just 3 types of reporting to give you a little bit more detail and context of what they are. And I want to explain what I think your role is, and we can have a discussion about this, and then how as we SAICA respond to some of the changes going on in the ESG and sustainability space. So let's get started. So this slide actually shows you where integrated reporting, sustainability reporting, but where all of the non-financial reporting is placed. Now, I want you to think about this as a map and not a hierarchy. And the other thing that I would like you to look at and consider is the use of the word pre-financial. So you'll see on the left-hand side, I've listed, this is where your financial reporting, which is probably what most of you are comfortable with, is sitting. And then on the other side is all of your sustainability and ESG type reporting. Now, I've labeled this pre-financial. And this is the term that I do want to stress. I haven't said non-financial on purpose because everything has a financial impact. It has a financial value. We may not know what the value is at this point, but there will be a time where some of these have a financial value attributed to it. So what you see here is also what many of the listed corporates are looking at, trying to deal with the legislative and regulatory requirements. And from a public sector perspective, they have to deal with the PFMA and the MFMA, as well as the Treasury regulatory reporting requirements. All of the above have different timings. So what I want to go through on the next 2 slides is look at some of those reporting frameworks that you may have come across, or you've seen the acronyms floating. And believe me, it is an alphabet soup out there. And it can become very confusing and very frustrating when you're trying to wade through all of these different frameworks and trying to understand what is it that you need to actually apply in your organization. So most of these frameworks are a mix of guidelines, frameworks, principles-based. They're all voluntary. If a company is a signatory or adopts a certain principle or a code, they will have specific reporting requirements that each company will have to abide by. So the 2 that I'm going to spend some time on this morning is the GRI, the Integrated Reporting Framework. I'll pick on just one aspect of King 4, which I would like to highlight around sustainable development and the relationship with integrated reporting and sustainability reporting, and as well as the Sustainable Development Goals, which theoretically is not a reporting framework. The TCFD requirements, which you see at the bottom of the screen, that is the Task Force on The Task Force on Climate-Related Financial Disclosures Recommendations. Now, we will have a separate session at this at a later stage, but it is one of the ones that I just want to highlight very quickly. This was as a result of the G20 finance ministers and central bank governors asking the Financial Stability Board to review how the financial sector can take account of climate-related issues. The FSB established the Task Force on Climate-Related Financial Disclosures to develop the recommendations for more effective climate-related disclosures. So they felt that would promote more informed reporting, that investment and credit and insurance corporates and companies could make better decisions around the future of those companies. Now, the TCFD has 4 types of disclosures. One is focused on governance, the second is around strategy, third is looking at risk management, and fourth is looking at metrics and targets. So it's really about asking companies to disclose based on these 4 areas what the potential impacts of climate-related risks, opportunities, strategies, how you respond to it, impact on the organization, but from a climate perspective. And one of the key things about these recommendations is how do you incorporate this into your financial statements. So very quickly, the CDP, which is the Carbon Disclosure Project, most listed companies have been participating in this program for years. So when you look at sustainability reports and integrated reports, you'll see quite a bit of disclosure on your carbon emissions or your carbon footprint, as well as in terms of your strategy or response on how to go carbon neutral, as an example. And then the UN Global Compact looks at 3 areas, and that is around human rights, fair labor practices, as well as fair environmental practices. So these are some of the more common ones that we see from a South African reporting perspective. Some of the other ones that you might come across, and I've just listed these for you, and it really depends on your sector, your industry, and your company, what your strategy is, what your ethos and culture is, in terms of which of these frameworks that you would apply as part of your reporting or ascribe to in terms of being a good corporate citizen. So over these past 2 slides, right? So I've listed a whole number of frameworks and guidance out there. Now, what's common across all of these, it's about promoting enhanced and transparent disclosure on social and environmental topics as a result of your company or your organization's behavior. So it's really about enhancing that reporting and creating the linkages to your financial information. So here, all I wanted to do is just try and demonstrate, as an example, this is what your corporate reporting suite could look like and how ESG or sustainability reporting falls within that suite. So this is just an old example from Nedbank's report where you see that you've got the financial statements, your governance reporting, your sustainability reporting, as well as your integrated reporting. Okay, so let's move swiftly on to GRI. So GRI is an independent organization that started in about 1997. So globally, GRI, which is the Global Reporting Initiative, it is the most widely adapted, used sustainability reporting guideline globally. And companies use this to describe or disclose their economic, environmental, and social impacts. It has evolved over the years to what we now have and what we call the GRI standards. So the standards were launched in October 2016, and they are requiring that all reports issued post-July 2018 use the GRI standards. Now, the standards were created based on a multi-stakeholder global process by the Global Sustainability Standards Board, which is the GRI's independent standard setting board. Now, some of the benefits that GRI has highlighted based on this structure and this modular design is that it's easier to update, it's easier to reference, it avoids duplication, it creates more clarity in terms of how to disclose your information. Now, there are 3 universal standards, 101, 102, and 103. And there are 33 topic-specific standards, so that's series 200, 300, and 400. Now, 2 standards were updated last year, the water and the occupational health and safety one, and this year the tax and the waste standard has been released. And currently the oil and gas standard is out for review, as well as the universal standards, which is the 101, 102, and 103. Now, historically in South Africa, many companies have issued sustainability reports using the GRI. They continue to do so, though we have seen a slight decrease with the introduction of integrated reporting. But it's mainly, and we still see those companies who have huge environmental or social impacts, like your mining houses and your banks, will issue a separate sustainability report. So just a little bit more detail around the 101 and 103 series. So 101 is the foundation, and it is the starting point for all of the GRI standards. And it sets out your reporting principles on how to define your content and quality of the report. It includes the requirements for companies to report on how to report in accordance with the GRI standards, and it includes how do you reference the GRI standards. Now, 102 is about general disclosure, and it's to report contextual information about the organization. Where's it based? How large is it? What is its strategy? What's its culture? What is its ethos? And how do you engage with stakeholders? And then management approach. Now, this is used by organizations to report on information and how it manages a material topic. Now, a material topic, for example, could be depending on where you operate and what your business is about. So say, for example, you're a mining company, you need to talk about, for example, your water usage, or how you manage biodiversity, or how do you manage land issues. So it depends on what the topic is and what it's referring to specific environmental, social, and governance issues, and not necessarily a financial topic in some cases. And then lastly, this is just an example of what the layout of the 200, 300, and 400 series are when they look at specific topics. And these relate to specific economic, environmental, and social aspects that a company may look at when it's looking at its general management disclosures from a materiality perspective. Cool. So let's move on to the UN Sustainable Development Goals. So you may have seen these icons around, I'm hoping. So the Sustainable Development Goals were launched in 2015. There are 17 goals. There are 169 measures, and they were meant to build on the Millennium Development Goals, which we didn't achieve. Now, I do want to stress that these goals are not a reporting framework. This is about how we as a country and as a planet move towards eradicating what these goals want to achieve. So there's alignment with these different goals in terms of the various developmental agendas and priorities of different regions. There is flexibility and understanding that each country has its own developmental challenges and needs. So, and that there are also data challenges. So it looks at what governments need to achieve from these different goals in pushing the developmental agenda within their countries, and how do they go about that. Now, the 169 measures give governments an idea of what the specific things that they need to work towards. Now, one of the challenges for companies is that when you look at those measures, they're very public sector focused. And that's the impression that as a company or as an individual, you can't really do anything about this. But here's the thing. Let's take gender equality as an example, the fifth goal. Now, one of the aspects of that is to ensure full and active participation and equal opportunities for women in leadership at all levels in decision-making from a political, economic, and public life. Now, this is not something new. This is something that most companies and most individuals, whether as in their personal capacity or as part of NGOs, have been working towards, have been thinking about. But it's how do we bring all of this together to respond to make a difference as a collective. Now, South Africa is a signatory, and there is an alignment to the National Development Plan. Stats SA is responsible for submitting reports to the UN in terms of what our progress is, but it is still up to everyone to participate and try and make these goals a reality. So this is just an example of how some companies are interpreting the Sustainable Development Goals, how they're embedding it and including it as part of their company's strategy and day-to-day activities. So I've pulled out Nedbank's example because this is how they report on it. But when you work through exactly their strategy and how they execute, you'll see this is more than just their CSI projects. It goes further into how they've embedded it as part of their strategy and daily operations. So moving on to integrated reports. So I'm sure most of you are very familiar with it. So I'm not going to spend too long on it, but just to give you an idea of where integrated reports started and potentially where it's evolving to. So there was a lot of work. As I mentioned, sustainability reporting has been in this country for pretty much, I think, more than 20 years. So sustainability reporting has been happening. Now, with that, globally and locally, there was always growing awareness around the impacts of environmental and social challenges. We had GRI, you had UN Global Compact, you had all of these frameworks that companies were using. But there was a challenge around that, and I think to this day, there's still a challenge around using multiple frameworks, in that it does make communication a bit of a challenge in trying to understand how all of this information fits together. So we had in 2009 King 3 being released, and it included the recommendation of an annual integrated report. Now, at that stage, nobody knew what an integrated report was going to look like, what it's supposed to be. It was an idea. So in 2010, we had the JSE listing requirements that were amended to adopt King. And at the same time, because there were no guidelines or guidance of any kind of what an integrated report should be, a couple of organizations, including SAICA, came together. That was the IOD, SAICA, and BUSA, that started working on developing some kind of guidance for companies on what an integrated report should look like, and that was in 2011. Now, globally, there was a lot of work happening in this space, and we have His Royal Highness, the Prince of Wales, who established the Prince's Accounting Sustainability Project, which continues today, and they're doing some amazing work around sustainability. But what happened is the Prince put out a challenge to the accounting profession as well as to finance leaders to say improve reporting around environmental and social issues. That resulted in the establishment of the International Integrated Reporting Council, and 2013 they released the International Integrated Reporting Framework, which is what we currently use today. So at this moment, the council is undergoing a framework review. We've responded as SAICA in terms of what we think the changes or edits to the framework should be, and that submission closed yesterday. And we'd appreciate, when we do put calls out, a lot of members did participate, and we're very grateful, but we look forward to more members participating when we put calls out to provide comments to these kind of framework updates. So very quickly, before I get into further details about the integrated report, I just want to highlight one extract out of King. Now, King makes mention of sustainable development, integrated thinking, corporate citizenship, stakeholder inclusivity, and how all of this filters into the integrated report. Now, what we need to understand and what the emphasis is here is that corporates are not islands operating on their own. They have impacts and are impacted by stakeholders, by the environment, and they have a significant influence in how stakeholders impact them and how to engage with stakeholders. So what it's calling for is that there has to be now a wider and a better understanding of environmental, social, economic challenges, issues, risks, and how companies need to deal with all of these and look at them more holistically other than focusing purely on a financial bottom line. So this is just something I'd like for everyone to think about and reflect in terms of how does all of this fit together, so that we look at integrated reports and sustainability reports with the financials, not as separate statements or reporting, but something that's connected in a very fundamental way. So let's get back to integrated reports. So integrated reporting is the process that companies go through to formulate the integrated report, and it does include other forms of communication. And if you remember that first slide where I tried to map all the different types of forms of communication, that's what we would call, that's where integrated reporting, would help. If you look at that slide, that will try and help you understand how integrated reporting kind of works. Now, the primary purpose of an integrated report is to explain to providers of financial capital how an organization creates value over time. Now, the framework is principles-based. It's applicable to any organization, any size type. It is trying to balance quantitative and qualitative information. But again, importantly, it is not a summary of information. So that is why that first slide I tried to indicate that that is not a hierarchy of reporting where the integrated report sits at the top. So it's not a combination, again, and it's not a summary of reports. So it's just a holistic representation of how an organization has performed, what its strategy is, what its governance structure is, and how does it create value over a short, medium, and long term. So one of the most famous diagrams out of the integrated report is the value creation process. Now, what this is about, it's asking companies to describe their business model. So how do you take the various resources? So you'll see on the left-hand side, we've got financial, manufactured, intellectual, human, social, relationship, and natural. These are all your capitals or your resources. These are your inputs into your business model. So this is what you use to convert or to make your products and services. And your business model is your strategy. It's your system that you have that transforms your various inputs into your outputs, which are your products and services. And these have outcomes. So these have impacts on your various capitals. So as an example, if you are providing a service, you have a very high impact on your human capital, which are your employees who help you deliver that service. So your business model looks at your strategy, your risks, your opportunities, your performance, and the impact from the external environment, how you pull all of this together, transform your inputs into the specific outputs, including waste. And then it looks at also how do you manage those specific outcomes as a result of your business activities. So this is the slide that I really would love for everybody to engage with us in the future about. And this is what is the role of the accountant, auditor, and assurance practitioner from a ESG or sustainability reporting perspective. And not just reporting, but how do you engage with these topics? So the first one is to look at, you might have to think about how do you redefine yourself, because the future and the role and the skills of an accountant is changing. So the checklists and ticking boxes is not what is needed anymore. There are major developments in technology, and in some instances, it has automated a lot of activities of an auditor. At a webinar earlier this year that I attended, there were I heard that 40% of CFOs in the US are not accountants. So what this says to me is that it's not that accountants and auditors are not necessary or have no future. It just means that there are some skills that we're going to need to let go of, and there's some skills that you're going to have to learn. So what I'm asking is to think about, explore your toolbox. See what skills are missing, what you need to improve your ability on. How does this make you ready for what's coming next? How does this help you engage with environmental, social, and governance issues? Now, this flows into the next point, where you can't ignore environmental and social challenges and the impacts of these. But it doesn't mean that you have to become an expert on any of these issues or understand or know all of them at the same time. What it's asking is, it's about engaging on these issues. So it's speaking to your sustainability people in your business. As I mentioned before, ESG has financial implications. So, and even financial implications have ESG impacts. So we have to think in an integrated way. We have to think that, have a system view where components of a system interact, that everything is interconnected, and that there are consequences of the decisions that we make. What I am asking is that you engage with us as SAICA and with other regulatory bodies and standard setters. There's a tremendous amount of work being done on a number of ESG topics. There's a tremendous amount of information out there, and it's asking about getting more involved, being more engaged. So this helps you with your skilling, upskilling, learning and understanding what these different challenges and issues are and how you can actually respond to them. It also helps these organizations better support you and provide you with guidance that has more value and that is more useful. And become a change agent. Understand what your liability, your responsibility is around ESG. Speak to sustainability teams, advocate for change. Finally, I just want to go through, before we look at questions, what our response is from SAICA. So we look at, from an ESG perspective, so we look at sustainability, integrated thinking, integrated reporting. We've categorized this into 4 areas: advocacy, thought leadership, education, and engagement. So From an advocacy perspective, we look at engaging and influencing change on various issues. An example is the work that we're doing with National Treasury's Climate Risk Forum to action the Sustainable Financing Paper. From a thought leadership perspective, we're looking at research that will enable and support. A couple of examples are the work that we've been doing with the health and well-being for employees, as well as the sustainability assurance research that we released earlier this year. And from an education perspective, look at our tech talks, the training, these awareness seminars, the events. We put a lot of information out on our various channels and platforms. And on the next slide, I will share with you the various platforms where you can follow us and keep up to date in terms of what is happening and what you need to know. And finally, we try to engage on specific topics through committees and forums that we have. So we'd love to hear from you. We'd love to have you participate in a lot of our work. So these are some of the channels that you can engage with us. Look out for our newsletters. You can also follow me on LinkedIn as well. I've put my Twitter handle, but on our SAICA channels, we do share a lot of this information. So I just want to say thank you. We will be spending a lot more time on some of the more details around the reporting, but this was really just to give you a quick overview of what some of the reporting frameworks are out there.